recessions can be a very scary thing, but they can also be a great time for opportunity. When recessions happen, prices of assets tend to go down. Why? It's not for the reason, fear. Fear is a big thing. When people are fearful about the future and they usually respond to the most imminent dangers, they're going to pay less for assets. Not only that, banks tend to get scared. Remember, bankers are stupid. They react to the most recent information and they're the ones that control the money. So during recessions, if they're giving less money out, what does that mean? It means asset prices have to go down. Because, hey, if I'm going to get less money from the bank, I need to pay less to get a higher return for whatever asset I'm buying. So this is the reality. The great news is sometimes recessions end up creating some of the best businesses. Why? People lose their jobs, and instead of getting a job, they might sit there and say, I've always wanted to start this business, and they go out and do it. But I don't want to diminish the fact that it's still scary for millions and millions of people. So what is a recession? Technically, a recession is 2 quarters in a row of negative GDP, negative nominal GDP, real GDP growth. Now, a lot of people will consider it just one quarter, but we recently had a 1.4% drop in GDP in the first quarter this year. But people said, wait a second, it's not a recession. It's got to do with trade and all this stuff. I don't know, and frankly, it doesn't matter to me what definition you put on it, as long as you're consistent. Since 1900, the average recession has lasted 15 months. 15 months. And I think this last decade was the first time ever where we did not have a recession within a 10-year, decade-to-decade period, which is a record since 1900. So, recession, by the way, recessions used to be called depressions, and then the Great Depression happened, so we stopped calling them depressions, now they're recessions. The point is on recessions is they can be scary, but they can also be opportunities to buy better assets at better prices. We've seen every asset, this has been called the everything bubble. Every asset has been going up and up and up. Real estate, stocks, stupid things like cryptocurrencies, NFTs, things like that have no basis for and no fundamental value, skyrocketing. For what reason? No idea. When times are good, everyone thinks that times can never be bad. When times are bad, like during the pits of a recession, we think, oh my gosh, things can never get better. If you go look at the history of stocks and asset prices when they fall in recessions, what invariably ends up happening? They rebound eventually. And you look back and go, darn, I wish I'd bought during that time. That's why we have our community. That's why we have our software. If you understand how to value things, if you understand how to think opposite of what the general public is doing, if you're able to do that, you can profit very, very handsomely during recessions. Every investor I know uses the cliche from Warren Buffett, be fearful when others are greedy, be greedy when others are fearful. People are talking about the recent weeks saying, see, I was greedy when others are fearful. This isn't fear, guys. This is not fear. This is not even close to fear. What's fear? When we see people saying, do not buy stocks, period. No, all we had now was, oh wait, all these Peloton, Palantirs, and all these stupid stocks fell 80, 90%. That's not fear. I want fear when, as my good friend Michael Moskal says, when people don't want to own Apple anymore. When people don't want to own Apple anymore, that's when fear is at its peak. Because this is a company that is considered the company for America right now. This is the company that represents America. 16 years ago, before the Great Recession, before the financial crisis, 2 friends of mine sat me down and said, Paul, we want to save for retirement. Can you help us? I said, sure. I sat down with them and I said, guys, one of the things I always ask people, if stocks fell 50%, what would you do? And I remember the wife looking at her husband and looking at me and saying, well, we'd buy more, right? I said, exactly. We're on the same page. I thought to myself, wow, I found people who really get it. Not just a year later, financial market crashes, stocks fell. I get an email. Paul, I can't stand looking at my stocks. What is going on here? I said, well, if you remember, we talked about this. She wrote back, so you're telling me you're buying? Well, of course I'm buying. We talked about this. What about you? Oh no, I've sold everything. I don't want to see my accounts go to zero. And I was just like, oh my God. Guess what? That was February of 2009. The bottom came in March of 2009. If you think for 1 second that they bought back in 2 months later, you're absolutely mistaken. There's a guy named Guy Spear. He writes a great book called The Education of a Value Investor. He talks about the same time period when he had value investor friends who were felt alone. And when the stocks started to fall, even though they understood the concept of buying when things were cheap, they were all bailing. So he decided to keep away from everybody doing that. This is why we have our community, guys. Because everyone in this community talks, and you'll see people in there say, guys, this is what we're being trained for. This is the part of the process. Stick to the numbers. Stick to the non-emotional side of things. Let the market determine the emotion and tell you, I'm willing to sell you this company at this price. and you determine if you're a buyer or a seller. That's the key here. It's hard to do, but if you're around like-minded people, instead of alone at home by yourself without anybody around you who understands, it can be a lonely road. This takes away the loneliness. That's what we've been doing that's been so key. People in here do research together. They talk about investments together. They use all of these tools to talk about their investments and determine prices they want to pay for stocks. And guess what? People disagree in here all the time. Just today, just last night, I was having a conversation with somebody about Tesla. We were having a discussion about what the value of Tesla is. My value was a lot lower than theirs. Their value was based on certain gross margin. I said, well, wait a second. I don't agree with that gross margin because of X, Y, and Z. And they said, well, Paul, what you don't get is X, Y, and Z. I said, okay, I don't agree with that thesis, but more power to you. There was no animosity. It came from two value investors who were speaking similar languages, just different dialects on that company. That same guy, we talk about other stocks and we see eye to eye on them. Or I think the stock is worth more than he thinks it's worth. That's the art of investing. That's why it's so important to have this community of people and these tools to be able to go through and look at investments and determine what you want to pay for them and weigh out all the garbage from the media. Every single time I look at the channels, every single time I look at news, it sits there and says whatever story needs to be said to justify prices that day. It's never about the future. It's everybody. They'll say it's about the future. It's not about the future. Jim Cramer is one of the most touted people on the internet. He is a trader. He is not an investor. He made his money from looking at charts, but we listened to him say how Kathy Wood's a genius in February 2021, and just a year later when her company's down 60%, he says she's a moron. No, Jim, you're the moron. Oh, she's the moron too. But there's a process. Go back and look at all of our videos about all these hype stocks. People were calling us stupid, crazy. Go read the comments. And guess what happened? They fell 70, 80%. Does that not mean stocks that I love haven't fallen a lot? They have. But there's a process for buying them when that happens. When you buy based on hype and only on hype, when the hype doesn't happen anymore, what are you left with? But when you buy based on value, when you buy based on cash flow, when the price falls, you usually still have the cash flow. And you can still rely on the cash flow. So it's like buying an investment and never knowing what the price is except for 10 years from now. Would you do that? If the answer is yes, then you buy the investment. If the answer is no, then you avoid it. And that's the key to investing. But the hardest part is in here and in here. It's not the numbers. It's the process. It's the emotion. We're not here teaching numbers. The numbers are the easy part. It's the community and talking about how you can get through the storm. How do you weather the storm? That's the hardest part of it all. I'm still working on it. 15, 20 years ago, I was the hype guy. 20 years ago, I was the hype guy. I believed in that. I believe you should pay more money, tons more money, and the money didn't matter what you were paying, is essentially what I was saying, for any stock that had future potential. And then I started to realize, well, wait a second. All these companies that had amazing future potential, a lot of them went to zero. How can that be? I realized there was another way, and value investing was the way. And we figured out a way to put it as part of a community with thousands and thousands and thousands of members in here, all talking every single day. You can go in there, you can search for a specific stock. It'll take you right to the chat, right to the point in the chat where we're talking about it, and you can engage in the conversation. Guys, this is all available for less than a cup of coffee per day. If this can increase your returns by 1 or 2% a month, or decrease your losses by 1 or 2% a month, it could lead to hundreds of thousands and maybe even millions of dollars extra in retirement, depending on your timeline. Less than a cup of coffee per day. 2 ways to sign up. everythingmoney.com, or for our international users, patreon.com. This website's growing every single month. We're adding more and more stocks, more and more exchanges, more and more tools. It will be better, and you're locked into the price you sign up for at the level you sign up for from here to the future. Sign up now.